caps?
No, I think Ashu, for mid and small cap, companies and specifically, stocks which have actually risen significantly in the last 6 to 12 months, I would presume that the volatility would be very sharp because obviously, these are stocks where, few big investors take positions. We don't have very large institutional investors or the FIs actually having, large stakes here. And really, in terms of a negative earning surprise, one could see a very significant kind of fall in not only the stock prices, but even, balance sheets of these companies are not pretty strong. I think in most cases, we have a very illiquid stock and we have very few shareholders, for the company overall. So I would presume that, one has to be very careful within the mid cap or maybe the small cap space. One has to look at liquidity as the most important criteria first. And obviously how good the balance sheet is managed, because clearly, if there are cases of promoters pledging their shares or typically if the earnings recovery turns weak, then liquidity is a big problem. There are very few buyers for these stocks in these kind of markets. So I think in this kind of market, it's better to avoid such stocks and, concentrate at least the front line where already a decent deal of correction has happened. And there, I think at least the best part is institutional money is going to come in. You're going to see the LIC and the domestic mutual funds at least putting some support to such kind of stocks, because in mid caps, I think that probability of, complete exit always remains.
Right, I'll take a couple of stocks in the public sector space.